So Forex in 5 this week. Sign-off in developed markets as always. In the US, inflation's starting to come in a bit softer. The Fed's preferred measure of inflation, core PCE, only rose by about 20 basis points month on month at the last inflation print. So there's many speculated the door's still open for a September cut. There's quite a few people sort of hoping that there'll be almost zero cuts for the rest of this year, but the door, like I said, is very much still open. The rhetoric out of the Fed continues to be relatively hawkish, given that they have walked back from the 3 rate cut sort of scenario from at the start of the year. But we'll have to see what happens in things like JOLTS data and non-farm payrolls. Clearly these are important metrics that the market looks at to decide whether there will be a need for further cuts and to stop growth from stalling. In Europe, however, there's a bit of a mix still on the board on the GC as to whether there's going to be cuts this year or not. There was some speculation that the cuts are going to come a lot sooner, but it looks like perhaps it's been kicked down the road a little bit. In contrast, in the UK, clearly we've just had a UK election be announced in the coming weeks. So Parliament has been dissolved. Rishi Sunak, the Prime Minister, or the incumbent Prime Minister, has promised some sort of loosening of monetary policy, and that's sort of thrown into question the impartiality of the Bank of England. But I imagine the Bank of England will stay fairly firm that they won't be swayed by any political agenda by the current Conservative Party or perhaps the incoming Labour Party. In Nigeria, it's been quite interesting. We've seen the CBN selling dollars again, which is perhaps nothing new. In the past, they were selling directly into BDCs, into Bureau de Changes, but they've taken the tack of selling dollars into local banks, but in very, very small amounts, sort of 3 to 5 million a day per bank, which in the grand scheme of things won't have too much of a material impact on liquidity. Now, the story around the small amounts of dollars being sold to banks at highly preferential rates, we're talking like 10% discount. There was a lot of excitement, a lot of thought that this would filter through into the market, that the rate would start to drop and the Naira would appreciate nicely. However, the rate did drop, but it dropped on very, very low liquidity. We didn't actually see like a massive bid for Naira. It was more people just sort of standing off, just sitting on their hands, not wanting to sell their Naira. This is now since reversed and we're sort of back to where we were, getting towards 1500 levels as we speak this afternoon. But where do we go from here? I mean, monetary policy, we've just seen another 150 basis point rate hike. It's going to become a law of diminishing returns. Obviously, rate hikes, whilst it's great for trying to fight inflation and create that new interest rate environment, it starts to put a lot of pain on the general public. And we're already seeing strikes this week among airline staff. We're seeing strikes among those running electricity grids. The political dynamic is looking pretty fragile at the moment. The worst it's been since Tinubu's administration came in 12 months ago. Clearly some favours are going to have to be given to try and keep the peace, and we know that Nigerians are extremely resilient when it comes to sort of like tolerating high fuel prices, unrest, etc. But clearly that patience is going to wear thin soon, but we'll see what happens in the coming weeks. Over in Kenya, we're still in that range bound 130 to 135 level. Dollars liquidity seems to fluctuate day by day in terms of what banks are able to offer. But it seems like President Ruto and Governor Thurgood are quite happy where the shilling is at the moment compared to, say, 6 months ago. President Ruto's just come back from the US where he was invited to Washington and ended up doing a bit of a roadshow, I guess, to try and encourage new investment into Kenya, and it looks pretty successful. I think it may take some time to actually filter through into Kenya, but it's quickly becoming that FDI perhaps destination in Africa, whereas for FPI, so foreign portfolio inflows, that's still Egypt is the darling of the hedge fund world. Obviously Nigeria trying to launch a Eurobond soon is in a similar frame of mind, but yeah, President Ruto doing all the right things at the moment. Inflation seems to be under control. It's a good news story. And finally, in Tanzania, There's been a deal that's been delayed for a new LNG plant with the likes of things Total Energy. That's going to be a pretty big blow if that doesn't come through, but it's a story we're monitoring. FX levels have been climbing again back to 2900, but we may see them come back down as the shilling appreciates.